Hey everyone, it's Mike Valtos, and it is Monday, November 6th, and I'm shooting this quick video on this new indicator that I've just am in the process of releasing. It's called the Valtos SR Levels, and what they are support and resistance levels that are derived from the order flow. Basically, it takes the order flow, and I have certain parameters I'm looking for in the order flow for market-generated support and resistance levels. And it's not some big fancy calculation, some VWAP, TWAP, whatever. No, it reads the order flow. I try to make order flow trading easy for people, and this is actually how I traded with order flow when I first started trading with order flow years ago. And just over the years, I've gotten so used to looking for these spots in the order flow that I didn't necessarily need to have an indicator. But people were asking me, specific questions about it, and I said, why don't I just create an indicator? It'll be a lot easier for traders to understand. So a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, the tools I use in this are NinjaTrader, and the Valtos SR Levels run on NinjaTrader. It's available for NinjaTrader 7, which I'll be showing you today, and also NinjaTrader 8. So if you are on NinjaTrader 8, you can also use it. You can run it on the free version of NinjaTrader. So say you have, your broker's own front-end system running on your PC for trading purposes, and you just throw up NinjaTrader on a second PC or your same PC and run the charts. As long as you got a data feed, you could use this indicator with the free version of NinjaTrader. So I'm going to talk about the gold market first. I'm going to talk about a couple of markets, but the first one I'm going to talk about is gold. Now again, this indicator will run on an order flow footprint chart, volume footprint chart, as well as a bar chart. Now for ease of explanation of showing you the markets, I'm going to run it on a normal bar chart. So just bear with me. Let me get the chart up. All right, so this is December gold. Now this is a 1 minute chart, and again, this indicator run on minute based charts, that run on range based charts, run on tick based charts. So like say you use a 987 tick chart or a 233 tick chart. People like to use tick charts and fib numbers. But this will still work on there on the different chart types. So what it'll do, so you see here, right, this red zone here, you have a red arrow for a sell, a blue arrow for a buy. Then it'll draw this zone. This is the area where support is coming in right in this area and right before it. Okay, because actually the selling is here, but I know that oftentimes when I have this set up in the order flow, that it's very common to see the resistance of just starting at that level and into that area, or in this case support right at this right where the bottom of this bar is, down into the next couple price levels. That's why it draws out the zone. And how you can use these is for stops. When you're getting on the other side of it, if you're trading above it, it's the reason for being in the trade is over, just as or if you're trading below it, if it's for a buy. But if you're trading into it, that is where your resistance is, or that is where your support is. And actually the area right before it, on the cusp of it, a tick or two just on the other side, is also support. It depends on where you want to buy or where you want to sell. There's different ways you can trade this, but what I'm going to talk about here is this gold market. So this is this morning, Monday morning, 7:30. You've got a sign right here where this red arrow is that there is resistance in the market. So how can you trade it? Well, one, you could either just get short immediately. Two, you can wait for a pullback and then take the trade. And if you're going to wait for a pullback, you got to realize sometimes the market's going to pull back. It may poke through by a tick or two. I know you look at charts, people, these trading experts, trading gurus will put up charts and they'll say, well, it has to trade right back to this point. It doesn't. But in real life, in trading, sometimes, the market pokes through by a tick, 2 ticks, 3 ticks on a pullback. You got to realize, right, we just sold off from, what is this, 1272.30. You sold down to 1271, 40, a buck, and you rally back. It doesn't always just stop right at a level. It may sometimes poke through. Trading is not an exact science, right? And sometimes, people analyze these markets and they expect, they expect it to come right back to a point. It doesn't. That's not how it works. There's, if you traded the markets, you know exactly what the point I'm trying to make there. So, even though it pokes through by a tick, it's not the end of the world. It was, oh, it failed. Yeah, if your stop is right here, then yes, it failed. If you're given this, 2 or 3 ticks, no, it didn't fail. Again, it's a support and resistance area, price area, not one particular price. It's funny because it's like you see these, I said I've been trading futures, for JP Morgan, for Cargill, for big firms, and you talk to these traders and you ask them, well, why'd you buy? Why'd you buy at this level? Well, it looked like it looked cheap, or here it looked expensive. They don't say, well, we pulled back to exactly 61.8%, or like a perfect fib number retracement right back to that one particular price. No, they're looking at an area and saying, hey, I think it's a good sell here, or hey, I think it's a good buy here. The big traders, the guys that move the market, that's how they trade. They don't sit there and say, well, it's got to pull right back to 1272.6 for me to get short. No, they say, hey, we're coming back up in this area here. I think it's a good sell here, and they sell it. Or it comes back down here, 1272. Yeah, I think that's a good buying area. If I could buy it somewhere down here, that's great. They don't say, well, it's got to pull back. It pulled right back down to 12. My fib numbers or whatever is saying, it's going to pull back to 1271.7, and I'm going to buy it. Well, chances are you're not even going to be able to buy it at that area. So that's what kills me sometimes about traders. But anyway, I digress. So you can see here, right here, that there's resistance. There's going to be resistance in this area, or at least there should be. And what happens? The market sells off, starts rallying back, and you run into that area, that zone where you have the resistance selling coming in. You see market sold off, rally back up in here. Now again, this zone, you could draw it out however far you want. I think this one I got set to 20. And you can see it's, it pulls back here again, sells off, pulls back up to that level, sells off again. And finally it broke through that level. There'll be these guys, oh, it broke through that level. Well, come on. It's already tested it once, tested it twice, tested it a third time. It's not going to just keep bouncing there and coming off forever. Eventually you're going to break through it. And then, the market's, this level for now is done, basically. And then you come in here, 910, you got another level kicking off. Now, again, don't think that you have to buy in this area or sell in this area. There's different ways to play it. You could just get long immediately. You could get long right on the cusp of this zone. You get long inside the zone. Like I said, there's different ways that you can trade it. And if you got long, inside the zone, great. If you got long immediately, great. If you got long just right on the outside of it, great. Point is, you got a trading opportunity. How you want to trade it is another story. Where you're going to put your stop? You're going to put your stop, just on the other side of the zone, just as you'd put your stop right above this area. And what happens is this one was a nice move. It went from, basically 1272, shot up really quick, actually, all the way up to 74.9. Came off again. Then you got a sell signal here, right? This one, 2 bars later, it just poked up through by 20 cents, came back down, and then started rallying up again. I'm not going to say, well, support becomes resistance or resistance becomes support, because we never really tested this level again. This was a resistance level that failed. And, honestly, I would love to show you the chart where it went from 1272 all the way up to, what was it, 1280. But, you did run into this thing. But again, there's different ways to trade this. I know some people that, that trade support and resistance, when it fails, they like to go the opposite way. But again, I'm not a big advocate of that. So anyway, this is where it gets interesting. So you got another buy signal up here. This is what, let me make this chart a little bit easier to read here, because you just had this big run up here. And so, what is this? 1282. You got to move up to 1284. You got a couple buy signals here. Then you got a sell signal here. So, from 1282 up to, what is that? 83.20. So it's for $1. And then you run into the support area. Well, you got a support area here. You got a resistance area here. Look how it's holding this. So if you're buying it back in here, you rally back up, from, it's not the greatest rally. Granted, you just had a $10 move in gold. Now it's going to consolidate a little bit, which is what you're seeing right here. So you got a little bit of range trading, right? So you've got, imagine, right? You got an indicator that, help you get in on trends. You got an indicator that can help you trade consolidating markets. Markets going sideways. You'd be buying it here. You'd be selling up here. Look, you rally back up into that zone, then you sold off back here again. So you could buy here, sell there, and cover it back down here again. If you want to get long, you get long on this one. It stops you out here. Then you got another buy here. It went up a little bit, not much. It's like a couple ticks. Sold off back into this zone. I mean, it did poke one tick through. Okay, if you're what do you want to call it? If you're going to put your stop right on the one tick past this, you get stopped out. But if you bought it here, again, this is having low risk trades, right? If you're going to be buying it in the zone and your stop is here, you're only risking 2 or 3 ticks depending on where you're going to place your stop. If you're buying it here at 1282, the bottom of this zone is 1281.8. So maybe you got it at 1281.7. You're only talking 3 ticks. But if you're buying it at 1281.9 and you can get out at 1282.5, that's you're risking basically 2 ticks to get 5 ticks or whatever. But anyway, so it did come back in here, rallied up again. You just had this monster move. Now you're sort of going into this period of consolidation. But here, remember this one, okay? Now remember these zones, right? You could draw it out however far you want, and you could adjust how high you want. Say you want to make it 4 ticks, you can do that, okay? I have on this chart, I have it drawn out 20, and you got this zone here, right? You just had a rally, right? So what do you have on a rally, right? When a market's rallying, you'll want to see supportive buying that's coming in to support the market. And why is that important? It's because it could be a big trader. So you got this market coming up, but you got a lot of sellers coming in. But if they're bidding the market, but sellers are coming in, just right off a high, trying to sell the heck out of this market, but you have someone there absorbing all that selling, that's going to be important, especially if you retest it later. So watch this. Let me make this chart a little smaller. Where do we come back down to? Let me draw it out for you here. No, what do I want? It's a rectangle here. Look at this. Look at that. This level here. You sold off. Where do you come back down to? You come right back down to that level where on this move up, you had that supportive buying coming in here, right? You sold off into that zone. So if you were waiting, again, if you were waiting for a pullback at this area, and you got bids stacked in here, 1281.20, 1281, and you just have, some stops here at 1280.8, even call it 1280, 50. Say you're risking, you're risking 5 ticks here. You rally up from 1281.20 all the way up to, just about 1283. So you're just risking, 3-4 ticks to get, 10 or 15 ticks there. Then eventually, we just sort of went sideways here. But this was the move, right? This is what you want. It's not, trading, people try to make trading a lot more difficult, but trading is actually really simple. You buy support areas, you sell resistance areas. If they break down, then they're no longer, if it breaks down, it's no longer support. Chances are it's going to become resistance. So if this market were to start selling off, I'd be looking for this area to be a resistance area. Or, right now, where are we trading here? We're trading a bit lower. What time is it? Gosh, well, it's the Asian session here. You had a level here. This one on the retest. Okay, so, it shot up here in the next bar or two. Again, granted, this is 6:30 p.m. Chicago time. You got a signal there. But, again, look at this. If, it's sort of just going sideways here. But if you were to draw this out, let's just make this again. Support becomes resistance. Resistance becomes support. Let's take a look at this, right? People sometimes, for whatever reason, people, they always try to make trading a little bit more difficult than it really needs. If you draw this out, right? I mean, look at that. Look how it's holding as a resistance area. Again, people say, well, you traded up here for a couple bars, it failed. I mean, yeah, I don't know. Again, it's a resistance area. It's not, one tick that if it trades one tick through, it's automatically dead. But, that's how it works, right? That's how support and resistance work. Okay, so what is this? This is the E-mini. It's another 1 minute chart. And I want to sort of step, this market S&P's rallied, had a nice rally today. But you can see you're running into some resistance selling. Honestly, whenever you're making new highs in the S&Ps, it really feels like you're running into resistance. And after the cash open here at this high, you sort of ran into the resistance area. It did sell off. I mean, it sold off a point, about 4 ticks. Again, you tested it again here. Eventually, it rallied back up. So I mean, you had a test here, it sold off. You had a test here, it sold off a little bit, but not much. Again, it's tough sometimes when you're selling and when the S&Ps are making new highs, because you really run into a lot of size. And S&Ps at this point, when you're running into new highs, you do run into a lot of levels with some very strong volumes. Now here's one, this high up here at 930. Again, 25.87. Even if you're waiting for a pullback up to test that high 87.75, down to 5.5, 5.75. You rally back up. We're still in this zone right here, right? If you were to draw that out, where's that here? Again, if you were to draw that out, right, you come back up here, 25.88. You can give it a try. I mean, if you're selling it at 88 and you got to stop up here at 88.75 or even 89, 2 ticks through. Imagine you're selling it at 88, you're risking a point, but you can get back 2 points, from 88 down to 86. It's about managing your risk in trading. That's what trading is about. Eventually, again, you're trading a 1 minute chart, 930. At some point, I wouldn't look for these levels to hold on a 1 minute chart all the way up until the close. But we sort of came back into this area. You hit it. You're sort of just hanging around here. Eventually, you make a new high again at 2 o'clock. And again, similar thing. First time you hit that new high here, you've got sell signal. But what does it do? It trades right back up into the zone. Again, you get another sell signal here right after it, actually about 10 minutes later. Don't make the new high. You trade just on the cusp of this. But again, if you're trying to get short, say you're short here from, I don't know what this is, say this is what, 89.5. Say you got an offer in here at 89.75, inside this initial zone. You're not stopped out of that position. I don't think again, if you start throwing some offers up in here at 90.25, 90.5, you don't get filled on those, but you're filled on your trade from in here, and you're patient. What is that? 89.75. What do you trade down to? 87, 86.75 here. I'm not saying you would have gotten filled at 86.75, but if you can get in at 89.75 and you're out at 87.75, that's 2 points. You're risking 1 point and you're getting back 2 points. Now, this is I like this indicator because one of the things you can do with it, among other things, I've got a more instructive video on it. Now, these two charts that I've showed you, I've got volume thresholds, volume threshold of 2000. So it's going to tell me that if, in this case, this is the E-minis, it's got to trade at least 2,000 lots in the bar. So here later, at 3 o'clock, 3:30, when, cash is closed and volumes are a lot thinner, I'm not getting signals because, maybe it's trading 600 contracts in one bar, or 30, I'll say 30, but if it's not trading enough volume to give me what I would consider a signal that's going to be meaningful, then I'm not interested in it. And the gold one I had set to what was it, as 500. I can see it right there. So again, honestly, to get 500 in the night session at 6:30 is, that's before Asia opens up, is actually quite strong. So I have a feeling this was a decent level. I would have liked to see more of a rally off of that, but when we broke down through it, you can see how support became resistance. You traded back up in here, you came off again. Short traded back up in here, went sideways, and then sold off again. How can you trade it? You can trade the breakout. You can trade the breakout. If you're not sure if this is support or resistance at this point, again, it's at 6:30. This is at 10 o'clock. I'm not sure you'd still hold it as a valid level 4 hours later. But if you were, you trade breakout. You just bracket your orders in there. Buy stop, sell stop. You get, buy stop here, you get in, but you got a sell stop to get out. Okay, then you got a sell stop to get back in. And again, went from 1280 down to 1279. So, Again, I'm not a big advocate of trading some of these markets in the evening sessions, but if you were, that's how you can do it. I mean, there's many different ways to trade this. So I'll show you the euro currency. Euro currency had a big move, but on, as far as this indicator went, because I was using a support and resistance level, I was using volume threshold of, what was it, 500. So then nothing actually showed, but just give me a second here. I think I had one that had no threshold. Just bear with me 1 second here. I've got all these charts open up. Sometimes it gets a bit confusing. Okay, actually no, this was it. Again, so this was this morning here. So you had a sell signal here. This is at what time? Just before 8 o'clock. Maybe 7:50 or something. But look. Okay, so this one's set volume threshold of 500 because if you set it to 0, and you could get a lot of signals flashing, which you probably don't want. You want to get when you're dealing with support and resistance, right? You should have a decent amount of volume traded, right? I mean, would you look at a support level where the bar trades 100 contracts as important, or a support level where the market trades a minimum of 500 contracts? Because support is where buyers are going to be coming in size to stop a move lower, where a resistance level is going to be an area where willing sellers are coming in to defend that price area. But look at this, right? If you were to draw this out again, you could draw this out on the settings. If you just go to the indicator, right, just open it up here. Where's it? Here, it's this one, plot width 20, right? I have it set to 20. You can draw it out 100 if you want. It's up to you. I prefer to try and keep my charts clean, and I'm able to look to the left. But again, if you want to draw it out, you can. Okay, here, let's draw this out here. But I mean, look at this. Okay, so we're in this range here. Okay, so you got a resistance level here, you got a support level here, right? Now you can get short here immediately, and it comes down to this area. It's not the biggest move, but you're coming into an area of consolidation. But if you were getting short here, I don't know what this is, 15, okay, you get a buy signal here, 10, that's 10 ticks. But if you got resistance selling up here, right, you put your orders here. That's it. I mean, you sit there. If it gets filled, it gets filled. If it doesn't get filled, it doesn't get filled. Simple. I mean, that's the whole point of buying support and selling resistance. Wait for it. And how most people will trade it is they'll say, they'll see, okay, well, we traded here, we traded here. They might not pick this up because they're not looking at order flow, and this doesn't look like a resistance level, honestly. But I know that in the order flow there was strong selling here, so I know that if we come back up here, there might be resistance again. Doesn't mean every time, no, but in general, that selling that was there is still there when you retest it. Just as you can see here, there was buying down here. We retest it. There's some buying comes here. Would have looked optically better if you didn't poke through it by 1 tick if that was the low of the day. But again, sometimes these things poke through it by 1 tick. When you're dealing with support and resistance levels and you're dealing with pullbacks, right? The market rallied from, what is this, 07, we'll call it, all the way up to 17. Then you sell off 10 ticks. Doesn't always stop right on a dime right at that bottom. It may poke through it by a tick. Again, it's a support and resistance level, not price. So, but again, the point is, they're selling up here. You put your offers in up here for the market to retest that. It's simple. You test it, you sell off. I mean, that's 10 ticks, right? You come down here, you got buy orders in here waiting for it to come back in. And it does. It comes back up and sells into that zone. Now again, it's not going to sit here and consolidate forever, right? And once this resistance level breaks down, it's going to be, it's going to be your support area. So again, I know people that will have buy stops up here, so when we do break down, when this resistance level break down, they're long. There's different ways to trade support and resistance levels. There's not just one way. And again, if you get in on trends, great. If you could have a way to trade consolidating markets, great. I mean, being a trader isn't having just one method that works, because the markets don't just trade in one method. Sometimes they consolidate, sometimes they trend. So if you got to have ways to take advantage of it, it's not like, you sell, you're a car dealer and you sell just one car. No, you got different models, because, different people are going to buy different cars, just as in trading, the markets go into these different market types. Now again, I'm not saying that you would have bought it here and caught this monster trend. If you remember, the market rallied bigly, as Donald Trump would say, bigly off that. But again, it's giving you some decent trading opportunities. You low risk, right? You have to sell right in here. You got to stop just right in here, a couple of ticks above it. You got to buy limit here. You got to your stop to get out down here if it comes through here to stop you out. But again, it's, look at this, right? So you have your level here. You have a level here. Now most traders, they'll see this. They won't see this part here. This is something that just came out in the order flow. But what they'll say is, well, you had a swing high here, you got a swing high here, so this is your resistance. Instead, by using the order flow that you have resistance selling here. So you could be waiting for it to come here. You're not waiting for this to trade and then this to trade and then, okay, well, I'm going to get short if we come back up in here. You're missing this trade. You're missing this trade. To get this, that doesn't work, right? You want to get in as early as possible. I don't think there was any more. I wish there was a buy signal here, then I could look like a fucking $1 million guru. But nah, that was it. But there wasn't that signal there. I mean, the interesting thing was that consolidating market at that time and how it held those levels. Look at that. You got one opportunity, two opportunities, 3, 4, 5. This one didn't come back down here. But, then, the breakout of the failure of this resistance area. I mean, because you can imagine, right? You're trading here sideways, in basically, 12, 15 tick range, from 06 to 16, 18. It's not going to sit here all day. And I mean, it can, but generally it's not. And once it's, it's like a rubber band, right? You wrap the rubber band around your finger, sooner or later it's going to snap off, and what's going to happen is it's going to go who knows where, right? And I'm not saying at this point it's going to go up, or at this point it's going to go down, when you're sitting right here. But if you know the markets, right, it's not going to sit here in a tight range all day, that it can snap out, and you could either get a big move up or a big move down. So you got buy stops up here, when you break this area, right? You got sell stops here if this were to break down to catch those moves. So anyway, I'll end this video. Actually, I was thinking of making it about 5 minutes. It turned out to be almost a half hour. This is a new indicator, and it's available for my inner circle. Or if you want to buy it, you can buy it separately. I mean, people have been asking me about it. But, I've got a presentation. I'm doing a webinar with Investor Inspiration on Wednesday. If you haven't registered, you should register. I'll be talking more about this indicator and hopefully showing you some more examples. But, again, this is the beauty of order flows, because you can read what's happening in the market, what's trading in the market. People think that volume doesn't matter. I really beg to differ. I mean, some people they're adamant, they're set in their ways of trading and saying that, no, volume doesn't matter. Okay, well, I'm not going to convince you otherwise, but if you can't treat all prices the same, and that's where indicators fail most of the time, is they treat all prices the same. And not all prices are created equal. You could trade 500 lots. You could trade 1 lot or 500 lots at a price, and it's going to have different meanings in the market. I mean, it could trade 500 lots here. It'll have a lot of different meaning if it traded just 20 lots. Just like in here, you may think, there's nothing here, but there was something in the order flow, in the volume, telling me that there was resistance in here, strong sellers in here to support to hold the market down from going higher, going back up, right? Because you're coming down, you got a little bit of buying coming in here. Why didn't the market go back up? It was because you got some strong sellers in there. Period. That's how volume is useful in your trading. Now again, people are going, oh, if you're such a great trader, why are you creating indicators and selling them? Why don't you just trading them? Well, honestly, I've traded, my entire professional career. People that know me know my background, but it's the way I look at it is, you want to be good at something. I struggle with, people, I say struggle with, but, I get upset when I deal with people who I call wet noodles, right? Who basically just want to be handed stuff, don't want to understand the market and understand how to trade, because, then they become jaded. And, trading is competitive, and you want to be competitive in the sense, I'm not sure competitive is the right word, right? You want to be competitive in the sense of being good at something, right? Of being excellent at something. And believe me, nobody's more competitive than I am. And, sometimes when I do get envious, of other traders, but it's not when they do something that's absolutely spectacular. It's because, maybe I wish I had taken that trade or something, but it's not to take it away from them. Sometimes I just wish that, there's trades that I don't take that, I wish I did. And, when going back to, being good at something and being competitive at something, it's, you want to be competitive so, you could be honed in and ready to go. And, one of the things that, these people that, internet trolls or whatever you want to call them, is saying, oh, well, if you're such a good trader, why are you selling this information, is because, you want to get it out there. People sometimes think that, the top shelf, right, the shelf where all the good stuff is, is actually infinite, right? It's not like there's no space up there for you being taken away by somebody else that's trading well. No, there's room for everybody up there. And then that's my goal is, to get traders that are struggling, to get them, up there, and up there to a better level of where they're trading, in their trading, and being successful, and basically just being good at trading rather than pissing away money on shiny objects, or spending $5,000 to sit down through some quote intensive course. Trading is not complicated. It's not rocket science. There is some science behind it, but if there's one thing you could take away, is you buy support, you sell resistance, and previous tops, basically become bottoms. And, you break through a support level, it becomes resistance. You break through resistance level, it becomes support. Those are, you don't need to spend tens of thousands of dollars to understand that. Now, where it comes in with order flow is order flow allows you to see, the volume, to make a better guess on something as being a support or resistance area, and to help you get in earlier, get in as soon as you know that there's going to be a support area. So again, imagine, right, you here, right, here's a resistance area. Okay, so you litter this area up in here with some offers. Okay, because you're thinking, if this is support, we're going to come back up here and test it, and if it really is support, it's going to hold and the market's going to sell off. Okay, so what happens? The market sells off. What do? You rally back up into there. You rally back up into there. That's what resistance does, just as support here. If you know that this is going to be support, if you can make a educated guess with the information at hand, that's all you can do, is make the best possible guess with the information that you have. And with order flow, I think you just have a little bit more information than other traders, rather than sit here, okay, well, I got a low here, I got a new low here, I'll draw a trend line here and call that. But even if you're drawing a trend line, right, you don't make a new low here. So if you're trying to buy it down here, you're not going to get filled. But if you know in this area there's some supportive buying in the market, you put some bids in here, right? And what happens? You get filled. The market trades back in there, test it. If you're wrong, you get stopped out. Okay, fine. You get stopped out, then you look for the next trade. That's how trading works. It's about taking small losses when you can. That's the majority of your losses, hopefully, would be small losses, but you take the small ones, and then you let the ones that aren't losses, you let them run their course for nice winners. So again, you're buying it here. Say you're buying it at 06, you got to stop in at 05. You're risking 2 ticks, but you're buying it at 06. Back up to 16, you're risking 2 ticks to get 10 ticks. So, that's what trading is about. Don't try to overcomplicate things sometimes. Traders do. Again, I try to make order flow a lot very simple and put it in everyday terms for people to use. So, hopefully watching this video, you hear my rambling. It may resonate with you, it may not. I try to record more videos. I've been going through a lot lately with some family issues, but hopefully now, things are back on track. And I'll hopefully get more videos off for you. But again, register for the this week's webinar. And I'm going to explain a little bit further some of the thought process that goes on with this this new indicator, and again how you can use it in your trading. So thanks everyone, have a great day. Bye bye.